Hey there, let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. Right now, snagging a mortgage in the U.S. is like running a financial marathon. Interest rates have hit 7.42% for a 30-year loan. That number might not seem sky-high, but for the U.S., it's like reaching the top of Mount Everest. Flashback to 2001, the last time rates were in this neck of the woods, hovering around 7.1 to 7.2%. That's a whole 23 years ago. So, if you were born in 2000, you're 23 now, and this is the steepest climb you've seen in your lifetime when it comes to mortgage rates. Now, let's take a stroll down memory lane to the 1980s. Back then, buying a house in the U.S. was a different ballgame. The average Joe's salary was about $20,000, and a house would set you back $100,000. That's a 5.1 ratio between house prices and salaries, not too shabby, right? Fast forward to today, especially in sunny California. Salaries might look good on paper, say $60,000 to $70,000 a year. But house prices? They're through the roof. A cool $1 million is what you'd hear for an average home, especially in places like Orange County. The gap's gotten huge, like Grand Canyon huge. So, there you have it. The dream of owning a home is getting tougher by the day, with interest rates reaching 2-decade highs and house prices playing in the major leagues while salaries are stuck in the minors. As of today, the price of Bitcoin stands at $62,900. This represents a 6% increase compared to yesterday's price of $59,000, and an 8% increase compared to the price 2 days ago, which was $58,250. The recent price movement of Bitcoin has been characterized by significant upward momentum. This could be attributed to various factors, such as positive market sentiment, driven by increased institutional adoption, as well as growing interest from retail investors following recent bullish price predictions by prominent analysts. It's worth noting that Bitcoin's price has shown remarkable resilience and bullish momentum over the past 3 days. This highlights the cryptocurrency's ability to attract buying interest despite occasional market volatility and fluctuations in broader financial markets. Investors and traders should carefully assess market conditions and consider potential risks before making any trading decisions. While short-term price movements can be influenced by speculative trading and market sentiment, long-term trends are likely to be shaped by fundamental factors such as regulatory developments, adoption rates, and macroeconomic indicators. Overall, the price analysis suggests that Bitcoin continues to demonstrate its role as a store of value and a hedge against inflation, attracting increasing interest from both institutional and retail investors amid a backdrop of economic uncertainty. Standard Chartered, right? They were all bullish before, talking about Bitcoin hitting 150 grand, but now they've pumped the brakes and are saying it might dip to somewhere between 50 and 52K. Talk about a mood swing. Then there's Peter Brandt, the guy who's been around the crypto block for years. Just yesterday, he was all doom and gloom, saying there's a 25% chance the Bitcoin market was donezo. But today, with prices bouncing back, he's flipped the script. Now he's saying if Bitcoin can stick the landing at 56K, we might just see it soar to new heights. But here's the kicker. These hot takes? They're just personal opinions. Even with all the experience and data, these market predictions are not set in stone. They're more like educated guesses that can change with the wind. And for anyone new to this crypto circus, take this as a heads up. These expert opinions are just part of the big picture. They're not fortune-telling. The future's always a bit hazy, so if you're thinking long-term, that's where the focus should be, not on the daily ups and downs. So that's the gist of it. Bitcoin's a roller coaster, and even the pros can't always tell you where it's headed next. Coinbase just dropped some news that's got everyone buzzing. They've raked in a cool $164 billion in revenue, which is way more than what folks were expecting. The forecast was $134 billion, but they smashed that number. Now, they're planning to use a chunk of that cash to buy up some Bitcoin, which is pretty much the crypto world's version of saying, We believe in this stuff. But Coinbase isn't the only one playing this game. Block, the company Jack Dorsey heads after he left Twitter and rebranded Square, is also getting in on the action. They've gone public with their plans to use 10% of their Bitcoin product profits to buy more Bitcoin every quarter. And just to give you an idea, they made about $80 million from those products in the first quarter alone. So that's roughly $8 million going straight into buying Bitcoin. Right now, they're sitting on a stash of 8,038 Bitcoins, and then there's Tether, cruising through a solid first quarter and deciding to join the Bitcoin buying spree as well. So, what we've got here are some big players making some big moves in the Bitcoin arena. It's like they're all saying, Bitcoin's the future, and they're not just whispering it, they're shouting it from the rooftops with their wallets. It's a bold move, and it's sending a clear message to the market. Bitcoin's not just a passing fad, it's here to stay. So, that's the gist of it. Bitcoin's a roller coaster, and even the pros can't always tell you where it's headed next. Before we dive into today's market-breaking news about CZ, Binance, and more, please hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Sure, let's not forget about what Michael Saylor's been saying at the MicroStrategy World 2024 conference. So, Saylor's got this view, right? He's looking at Ethereum, ETH, and a bunch of other big-name cryptos like BNB, XRP, Solana, and Cardano, and he's pretty convinced that the SEC is going to tag them as unregistered securities. It's like he's seeing a trend where these coins aren't getting the nod from the Wall Street crowd, which means they're not making the cut for spot ETFs. Now, when it comes to Bitcoin, BTC, that's a whole different story. Saylor's all in on Bitcoin. He's calling it the golden child of crypto, the one that's got the full green light from financial bigwigs, and he doesn't see any other crypto stepping into that spotlight. And hey, MicroStrategy isn't just talking the talk, they're walking the walk. They've just scooped up another 122 Bitcoin, bumping their stash to a whopping 214,400 BTC. They're not stopping there either. They've got this new thing brewing called MicroStrategy Orange, which is all about setting up decentralized IDs on the Bitcoin network. But let's not forget the mood around Ethereum spot ETFs. It's like the initial excitement has hit a wall. The odds of an Ethereum spot ETF getting the thumbs up have tanked, with only about 11% of folks still holding out hope. The race is on, though, with 7 Wall Street giants, including the likes of BlackRock and Fidelity, jockeying for position. They're all eyeing that May 23, 2024, deadline when the SEC's supposed to make the big call on whether ETH is a security or not. And get this, the team behind MetaMask isn't just sitting back. They've taken the fight to the SEC, suing them over this whole classification business. Even the SEC chairman, Gary Gensler, is keeping his cards close to his chest, especially when it comes to Ethereum spot ETFs. He's been pretty clear that Bitcoin's in the clear, but the rest, not so much. To top it off, even the folks at Standard Chartered are flipping their script, now saying the chances of an Ethereum spot ETF getting the go-ahead in May are slim to none. So, that's the scoop. Saylor and the crypto world are bracing for what the SEC is going to say next, and it's anyone's guess how it'll all shake out. Now, folks, let's chat about what's been happening with XRP lately. So, you know how sometimes you find old coins in your couch cushions? Well, something similar's been happening in the XRP world. Sentiment, this cool analytics group, noticed a bunch of these old coins that haven't moved in ages suddenly getting active. It's like they all decided to wake up and stretch their legs at the same time. Now, there's this thing called age consumed. Think of it as a tracker for how long coins have been napping. When this number goes up, it means a whole bunch of these sleepy coins are on the move. And guess what? That's exactly what's been happening. Usually these old coins are super chill and don't move much because they're held by the crypto veterans, the long-term holders. So, when they do start moving, it's like a rare Pokemon sighting. You know it's something to pay attention to. Just this month, there was a big spike in the age consumed, and it looks like some of the old-timers decided it was time to make a move. And here's the kicker. The last time we saw a spike like this, XRP's price took a bit of a tumble, dropped by 16% to be exact. So, putting it all together, this dance of the dormant coins could be hinting that XRP's price might be heading for a slide. It's like a heads up from the market's crystal ball. Pretty interesting stuff, right?
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.